Good afternoon, ladies and gentlemen. I hope you are doing well. Take a moment to pull back from that keyboard. I've got my friend Tyler Wood, CMT, GoNoGo charts. Tyler, it's amazing overall what we've been seeing in the market right now. We finally got a little bit of a breakout through there, but you have a certain way that you look at the market. You have a way that you make this analysis of, well, is this my short-term move, my long-term move? And I think a lot of people are asking that right now.
Yeah.
Is this going to be a continuation of volume, price, participants? What are your thoughts? What are you seeing within the market?
Oh, well, thanks for having me again, Creed. It's great to see you. And yes, it's great to see, the new shoots of flowers and saplings here, upstate New York, starting to spring into bloom. We did have a freezing cold night last night, but the markets are showing quite a bit of constructive evidence as well. Let's start with just a 30-minute chart. So if for those of you who trade intraday, if you were looking at the Qs, we have had some very strong moves, right? And with GoNoGo charts, what we're trying to do is reduce analysis paralysis. There are an incredible number of powerful technical tools that can help us stay on the right side of markets and, more importantly, manage risk. Technical analysis is it's really the only game in town that will help you define when you get out of a position. We can do all the fundamental work we want for security selection and idea generation. We can love the story, but typically that data is lagging in a way that doesn't really offer investors or traders an idea of how to manage their risk and stay out of those no-go trends. So what we're doing is combining all of the most widely used, back-tested tools in the technical discipline, but we're using all of the computation on the back end. We enjoy the information, that's very powerful, but we don't want all the squiggly lines on our charts. So what we're looking at here from a trend perspective, if you think about multiple moving averages or Donchian channels, parabolic SAR, a number of different tools that we can use to look at direction and veracity of trends, we blend all of that in the background and we get a simple color-coded chart. And the name of the firm is GoNoGo Charts, which we borrow from NASA, right? If you're going to launch billions of dollars of hardware into space, you want the conditions to be pristine. You want the greatest probability of a successful launch. Well, the same thing applies to investing or trading. So if we were looking at the Qs on this intraday basis, this is just a 30-minute bar, we would think about entering Go trends. And you and I were just talking about this ahead of today's show. What kind of trading rules would you put to work if you were running funds using GoNoGo charts? Well, at the very simplest level, if you just had a binary system of being long Go trends and being short or out of no-go trends, you outperform the benchmark. There's a lot of back-tested results on our website, and I'm happy to answer questions for anybody who would like to dig in deeper. But that very, very simplistic view is just the tip of the iceberg. So what we could think about, right, being involved in securities that are in go trends, meaning that the entire confluence, multiple signals in the background, the weight of the evidence, if you will, is to the upside. Well, then we want to trade with the herd. We want to follow those trends. And so we can also look to these little green icons. I'm not sure if you can see my cursor there, Creed, but what that's telling us is an important interplay between the GoNoGo oscillator and this GoNoGo trend in the price panel. And what we're seeing is that momentum came back down to neutral, tested the zero line. That should offer support in a strong upward move. If we have a sustainable go trend, momentum is not going to break down into negative momentum. We've got buying enthusiasm that can come back to neutral, but then find support and continue. So this green trend continuation icon tells us that momentum is resurging in the direction of the underlying trend. Well, that is the secret sauce for trend followers writ large. We are looking for confirmation from multiple signals. We want to see that the trend, the price action itself is moving in the correct direction. And then we see that resurgence of momentum to give us credence, if you will, conviction to our trade. The other thing that we've done, we love data visualization. We love taking as much information as possible and putting it into a very clean looking view, because the human mind can process images a lot faster than we can big tables of numbers. So we've involved volume in the momentum oscillator. When this line turns from green to dark blue, we've got high relative volume. So when we're looking at this 30-minute chart of the Qs more recently, we're in a go trend, momentum is positive, volume picks up, the go trend itself goes from the weaker form to the stronger form trend, and we come back to test the zero line. We build a little bit of a squeeze. That's a volatility compression indicator that when our oscillator is sustaining a zero neutral reading, that means we've got a bit of a tug of war between buyers and sellers. And then there's our trend continuation icon. Momentum breaks back positive on heavy volume, and we're off to the races. And these are big moves up. Now, you asked, Creed, what I think is probably the most important question for all investors. Great, we had a big run. Maybe you participated as an intraday trader. Well, what does that mean longer term for the markets? Well, when in doubt, you've got to zoom out. So that short-term move, we were looking at a 30-minute chart. If we bounce that out to the daily chart, right, we're still at a pretty significant resistance area. Let's just throw a little horizontal trend line on there, right? If we go from the closing price, we've actually broken above. And it's still midday here on Thursday. We don't have the close of that final bar, but we can see that we are currently above that resistance area. Well, let's step it out again, right? We're in a go trend on the daily. We've been in a go trend on the intraday basis. We've had strong moves higher. What if we bounce this out to a weekly chart? Well, we see that all through 2022, even in these highly volatile mean reversion moves, right? The counter trend rallies were very seductive to a lot of investors. They wanted to get back in summer of 22. But on a weekly basis, that never left the no-go trend, right? We stay out of those. On a weekly basis right now, we are in a strong form go trend. And indeed, if we close this week above that resistance line, we've made new highs. Now, the importance of making new highs, right? We're soaking up a lot of that overhead supply. There are a lot of sellers at these levels, probably trying to get back out at break even. They may have lost money on this move or lost money on this move. That's what overhead supply is. When we have a resistance line, it's because there are sellers at these levels. And it's been a really congested spot for several months now. We've been in this range-bound territory. But we can see just from our classical Edwards and McGee style technical analysis of the 1940s, we've had a series of higher lows. And if we can break to new highs, then this ascending triangle is looking like a very bullish setup for a trend continuation here in the S&P 500 and U.S. equities at large.
So that brings on a question too. I'm going to play devil's advocate for a second here on it. We saw recently too where the UAE, et cetera, said we are short U.S. equities. How could a macro development like that take effect? Because that's not like a small country like Botswana saying, yeah, we're short equities. Okay, cool, go on. That's a big matter overall. So yeah, we're TNA people at the end of the day, but it is kind of hard to ignore something like that. And I just saw right here on the ES itself, we were tagging right at that 4,200. Now we're selling off a little bit coming into the lunch hour here. But what are your thoughts on that type of a macro sentiment being so bearish? Could that be a resistance?
I'm so sorry about the noise in the background there. But what I would say about investing generally is that we are all faced with very dark headlines. The news is not pretty. People are still preparing for a recession. And just keep in mind, Creed, that economic data, when we're talking about gross domestic product expansion or contraction, that is lagging quarterly data. Sometimes it's a year after recession starts before we can even confidently confirm that it is indeed an economic recession. Now, when you think about time frame, you also have to think about the size of the pool of capital that you're working with. So a sovereign wealth fund, if they are talking about moving large institutional pools of capital, they're also looking very long term. Now, I do see outperformance from countries outside the US. There are opportunities in Europe, in the UK, We've also seen Mexico and Singapore outperforming the S&P 500 on a relative basis. And so when they're thinking about their global asset allocation mix, they're not just looking at equities, they're looking at commodities, liquid alternatives, foreign investment, equities outside the US as well. What's interesting to me about this last push in the US is that not only are we seeing breadth improvement, breadth expansion, but if we just take a look under the hood to the sector leadership on a relative basis, here on the daily chart, this is a GoNoGo Sector Row Map. We can see each of the ETF sectors of the S&P 500, technology, consumer discretionary, and communications, sort of the growth equity sectors, are leading this market higher. They are outperforming a rising S&P 500. So the dominance of American investing over the last decade has really been driven by our technology sector. Silicon Valley in California doesn't exist in a lot of other economies. And when we were in more recessionary territory in the bear market of 2022, it was the cyclical sectors that were outperforming, right? Banks, energy, the financial sector and the industrials sector. What is Europe full of? Banks and industrial, and certainly we can look to a lot of commodities-driven economies around the world that outperformed in that environment. So I would take it with a grain of salt if we're seeing headlines that big sovereign funds are pulling out of the United States, don't want to have a big allocation to U.S. equities. They're betting that that the technology and the growth equities sector of the U.S. are going to underperform maybe over the long term. And so, time will tell. But I think a lot of the aggressive debates on Twitter could be solved just by clarifying what your time horizon is. If you are a intraday trader, then you found a lot of great opportunities during these mean reversions of our bear market. So I think the viewpoint really depends on time frame and the size of the pool of capital.
I love it. I love it. All right, Tyler, I want to be respectful of your time overall. If people want to learn more about GoNoGo charts, or maybe even a little bit about the CMT too, how can they get a hold of you?
You can get a hold of GoNoGo charts at our website, www.gonogocharts.com. The tools are available on tons of platforms all across the industry. If you're trading somewhere, you're using a data analytics platform and you don't find GoNoGo charts there, please let us know and we'll work on that integration. And then for the CMT Association, which is very near and dear to my heart, I've been their managing director now for the last 12 years. You can go to cmtassociation.org and learn more about the education and credentialing that we deliver to professionals around the industry. So yeah, looking forward to hearing some feedback from anybody. If you've got specific GoNoGo questions, you can shoot an email to info@gonogocharts.com.
I love it. Tyler, again, thank you for not only doing this analysis, but giving us a good, clear thought process as we're seeing these developing markets here. With that being said, I look forward to talking with you again on the next one, my friend.
Absolutely. Thanks so much, Creed. Talk to you soon.